All right. So very good evening, students. We have had a good long discussion on journal entry in our previous class in three consecutive sessions. So I presume you have gone through. Now today we are going to learn one step up, which is ledger. Now the objective of today's study is going to be to understand the meaning of ledger, features and utilities of ledger, format, how it is made, mechanics of posting, the process of posting, balancing, how a ledger account is balanced, difference between journal and ledger we'll understand a bit, and finally we will learn a bit of trial balance. So these are the subject or topic of study today. So we will start with a preface here. Let me reiterate on the example that I gave you while I have taken up debit rules of debit and credit. So this is a sweet shop. So we have an accountant sitting here, there is an owner sitting here, and the manager. Now in this scenario, there are lot many activities which happens in a sweet shop, or for the matter of fact, any firm. So there is purchase, there is sales, there is salary paid, rent paid, a number of transactions which happen. Now, if any given point of time, if the owner would like to know that what is my total purchases. So in a journal entry, usually if there is a purchase, we pass the entry purchase debit to sales, to cash if it is a cash sales, and or else if it is credit sales, we write the name of the person from whom we have bought. Or there is again, if there is sales done, so cash debit to sales, or there is rent paid, so rent debit to cash. Now these are some of the transactions which most commonly happens. Now here, if when there is a purchase, now if the owner wants to know what is the purchase, if there are 10 purchases or 20 purchases in a month, then for an accountant to submit the report of total purchase that has happened during the month to the owner will depend upon the account's activity of going through all the pages wherein the purchases have been entered, and he need to find out this amount and total it up and submit the report to the owner, which happens to be a tedious task. So the solution for this lengthy task is to prepare a ledger. Ledger is a balance. It shows a balance of various transactions under a particular head that has happened during a given period of time. So therefore, he can easily refer to that particular ledger wherein he can see what is the total purchase. He does not need to refer to the journal and look for the purchase entries and then sum them up and show it to the owner. This is not required. So it is providing, ledger provides a solution to the lengthy process of finding out the balances by referring to the journal entries. Instead of doing so, we can prepare a ledger. On a look of it, we can very easily find out what is the balance of a particular account. Similarly, it may be cash balance, it may be sales, it may be total salary paid, it may be rent paid, a number of them. So let us see what is the meaning of, on understanding this premise, we will see the meaning and subsequent features and related aspects. So ledger is a book which contains in a summarized and classified form a permanent record of all transactions. It is called principal book of account or book of final entry. So it is, as we have seen, book in which or which contains summarized and classified form of a permanent record of all transactions. Now features which are appearing here: master records of all transaction accounts. So ledger will have various accounts. Each account will have a balance. So it's a master record prepared from journal. Journal happens to be the basis of preparation for ledger. It shows current balance in all accounts. So as of time when we want to know, we can easily find out what is the current balance. Trial balance and final accounts are prepared from the ledger accounts. So trial balance, because each of the accounts shows a final balance, that balance gets listed in trial balance. So therefore, to prepare trial balance, we need to refer to the ledger and its balances. Accordingly, it is entered in the trial balance. And from trial balance, we prepare final account, which is nothing but trading account, profit and loss account and balance sheet. So basis the information put up there in the trial balance, we prepare the final account. Now, ledger accounts summarize the effect of transaction upon assets, liabilities, capital, income, expenditure. So if a particular asset during the year, if we have bought something, so any particular new asset, there will be addition appearing in the asset in the ledger account of that particular asset. Similarly, if there is a credit purchase done, then the liability will be appearing, the capital, income, expenditure. Now, utilities which are appearing here, so let's see what are the utilities of ledger. So provides complete information of a particular account. Now, this is important to understand that it provides complete information of a particular account. So there is nothing which misses any particular account. If we refer to, we'll have the complete information. Information of income and expenses. What all income that we have had and the expenses correspondingly that we can very well find out. Then the preparation of trial balance, helpful in preparing a final account. So this is what we have seen as well. Now, format of a ledger. Let us understand, draw a format of a ledger. It's simple. So we'll just draw one line here. Then there is another one. We'll divide this into two equal parts by adding one additional line denoting that it is equally divided. Then there is date and there is amount column. We'll see here this is amount. Then we'll make it little more bigger. So this is your date and there is amount and there is journal folio and there is journal. So this is let's say purchase account. Similarly, there will be sales account. So date, here we write the date, then we write the particular, then here we write journal folio, then this is amount. Then there is date, particular, ledger folio, sorry, journal folio, and this side is debit side denoted by DR, and this is credit side denoted by CR. So we will write here CR. Okay, so this is your credit side. Now, so this is the format of a ledger account. How entries are made in this, we will see subsequently. But for now, you understand there is a date column, date of the transaction, particular for what account, for what reason purchase is debited. So if there is purchases to cash, so we are making the payment for purchases done. So we'll write here cash. Then there is journal folio, the page where from this particular transaction has been picked up from the journal. There will be a journal folio, amount, and then similarly corresponding side as well. Now comes the posting in the journal, posting the entries. A process of transferring the transaction written in the journal to ledger is called posting. So from journal, we prepare the ledger and that preparation process is called posting. Now, posting of simple entry. So simple entry and complex entry. Simple entry, for example, let's say cash debit to sales. This is the entry we pass for sales done. So let's say 1000 rupees of sales that has been done. How we are going to, this is the entry. We need to post it. So how is the posting that is required to be done? So we will prepare two accounts. One is cash account and second one is sales account. Okay. How the entry is made here, cash account debit. Format would remain the same. I'm just drawing it for understanding sake. Cash debit, cash account debit, and here this is credit, this is debit, this is credit. So cash account debit 1000. So cash account debit to sales 1000. Okay, cash debit to sales and sales is credited by cash rupees 1000. So this is how the entry cash account debit side. So right in while posting, you should read it this way that cash account is required to be debited by 1000. We have debited cash account by 1000 by writing sales. And sales credited means sales account is required to be credited by 1000 and the entry or the particular is mentioned as cash because it is a cash sales. Now supposingly if it would have been a credit sales, so Ram debit, supposingly we have sold to Ram. So Ram debit instead of cash we are writing Ram to sales. All right. So Ram debit to sales. So there is another account that gets opened here which is Ram account. So we'll write here Ram account similarly. So Ram debit to sales. So Ram write on Ram's account debit side to sales say 1000 and sales account is required to be credited because we are writing it on the credit side. So sales account is credited by Ram rupees 1000. So we'll write here by 1000. I hope this is clear. So how we are to read it? Cash account is required to be debited and sales is required to be credited. So cash account debit to sales, sales account credit by cash. Ram account debit to sales and sales account credit by Ram. This is how it is to be read and written. Posting of compound entries. So what are compound entries? So let's say sold goods to Ram rupees 1000. Okay. And discount allowed is 100. So how it is to be entered? So Ram debit to sales. Now this discount is an expense. Okay. So there is a discount is also to be entered debit. So 100 rupees of discount we are giving him. 900 rupees Ram is debited 900 and sales total is 1000. I hope it is clear. So how we can write it? Let me write it once again. We can reverse it this way. Ram debit, Ram account debit, discount account debit to sales, being goods sold on discount. Okay. So Ram debit how much? 900 because 100 rupees of discount we are giving him. Discount is 100 and sales is 1000. This is how the compound entries are made. Now let us understand how the posting is done. So we will prepare Ram account. Okay. So there is one account, Ram account. So we'll prepare Ram account. This is one. Then discount account. Okay. And then the third account which is prepared is sales. These three accounts are involved. So Ram, how entry is to be made? So Ram debit to sales. So Ram account is debit to sales 900. Okay. Now discount account debit to sales. So we'll write here discount account debit to sales. How much? 100. Now sales account is credited by Ram 900 and by discount 100. This is how this posting is done. So Ram account is required to be debited by 900. So Ram account we have debited by 900. Discount account is required to be debited by 100. So discount we have debited by rupees 100 and sales account is required to be credited by 1000, but there is a breakup. Out of this 1900 is due from Ram and 100 rupees is the discount that we have allowed. I hope this is clear. So now we will go ahead with understanding the opening entries. So how the opening entry, pass the opening entry on 1st April on the basis of the following information taken from books of Gurman. Also post the opening entry. So opening entry is how we have already seen. So I'll make the opening entry here. Cash account, cash in hand. So we'll write here cash in hand 20,000 is debit. Okay. Then debtors debit 60,000, stock debit 40,000, plant debit 50,000, land and building land debit 1 lakh and creditor to sundry creditor. Now this sum total we need to first of all make. So it comes 80, 1 lakh 20, 1 lakh 70, 2 lakh 70,000 and creditor is 1 lakh. So 2 lakh, this is 2 lakh 70,000. 80, 120, 170, 2 lakh 70,000. Okay. And this is 1 lakh. So what is the difference? You will see that credit side is showing only 1 lakh and debit side is showing 2 lakh 70,000. So there is the difference amount is capital. So we'll write here 1 lakh 70,000. This is balancing figure, difference between the two. So this is the opening journal entry that we have passed. All the assets are required to be debited. We have debited all the assets. All the liabilities are required to be credited. We have credited. In case there is a difference, the difference is nothing but the capital or creditor in case there is already a capital given in the question. Now, this is required to be furthermore posted. So how the posting is to be done? I'll give you one or two. For example, this is cash account, cash in hand. So cash account is required to be made. This is cash account. Then we prepare the next one is debtors account. We'll prepare debtor. Okay. Then third, we will see similarly stock, plant, land and building. Now creditor is creditor and there is capital. I picked up two. So two from liability side and two from asset side. So what is written here? Cash account is required to be debited. Cash in, no, there is no transaction. This is opening. So 20,000. So how we are going to write here? Cash to balance brought down 20,000. Okay. Similarly, cash in hand 20,000. Debtor to balance brought down. These are all debit balances. How much? 60,000. Okay. We will write this 60,000. Then creditor shows credit balance. So here by balance brought down. How much? 1 lakh. And capital by balance brought down 1 lakh. So this is how it appears. This is how the posting is done. So each of the account we have debited there is a corresponding credit done, then the balances are put up in their various accounts, and then the way we have seen how we can balance them. So this is the opening balance at the end of the month or year. So how we are going to close this? So this is 20,000. So we'll write here 20,000, here also 20,000, and here by balance carried down. We write here carried down. How much? 20,000. So this balance gets closed, and this is brought down to the next year. So to balance brought down 20,000. Okay. Similarly, debtor by balance carried down. How much? 60,000. So this gets balanced. So we have 60,000. We'll see here 60,000. This also 60,000. And this is brought down. So to balance brought down, which is 60,000. I hope this is clear. Then second, creditor by balance brought down. So we'll see here right here to balance carried down. How much? 1 lakh. We'll equate it here. So there is an equal 1 lakh, 1 lakh, and here to balance it should be on the credit side. Okay. So we'll write it here credit side by balance brought down. How much? 1 lakh. So this one we have brought here 1 lakh. Similarly, capital it will show credit balance. So here we write to balance carried down and by balance brought down. So this is the way we prepare opening journal entry, and from opening journal entry we post it to their respective ledger in the form of balance brought down. And during the year various transactions happen. At the end of the year we close the particular account by closing it, and whatever is the balance which is appearing, if it happens to be debit balance, it will be appearing on the debit side. Usually assets show debit balance, liabilities show credit balance. So there is due balance brought down means it is the debit balance. Creditor by balance brought down means it is a credit balance. So debit balance all assets showing, credit balance all liabilities show. Expenses always show debit balance, and income gain show credit balance. Capital is a liability, so it shows a credit balance. So here the balance brought down, which is 1,70,000. This is the total 1,70,000. 1,70,000. I hope this is clear. This is how entries are made. Now we will understand this trial balance here. So trial balance is nothing but, so we have whatever the balances which are appearing here. For example, this is cash balance. So cash is showing 20,000 rupees balance. So we'll write here trial balance format is this. So there is cash which is showing debit balance. So 20,000. We will write that cash here 20,000. Similarly, if there is debtor, so we'll write here debtor 20,000 or 10,000. I think 10,000. Sorry, 60,000. So we will write debtor 60,000. And if we have to take it up to trial balance the creditor, so which is showing 1 lakh. So we'll write here 1 lakh creditor 1 lakh on the credit. Similarly, there is capital 1,70,000. So capital 1,70,000. Both these balances should be equal, which ensures that if for every single debit there is a corresponding credit. To that extent, a trial balance, if balances tally, it ensures that there is a debit as well as credit done. There may be still mistakes appearing, so even if trial balance happens to get tallied, does not mean that everything is correct. But from the understanding perspective that there is for every debit there is a corresponding credit done, that is why debit balance and credit balance is appearing the same. I hope this is clear. So we have understood now. This we will understand in greater detail. So far today we have understood the way ledger, the theoretical aspects of ledger, what are the ledger, how meaning, the importance, the way we happen to put it up, the definition, all these related aspects we have understood. This, then the posting from journal to ledger, simple entry, compound entry, and then finally opening journal entry, how the opening journal entries are put up into journal, and then from journal the ledger account gets prepared, and how the balances, each of the account gets balanced, and subsequently the balance carried forward where it is put up, and then finally we prepare the trial balance out of this. So I hope we have understood the concept of ledger, be it preparation of the format of ledger and posting and related balancing of a ledger account. So anyway, I hope the whole discussion that we did you must have understood. It's my appeal to all the students. You can share the channel which is AKS Commerce Academy, wherein I have already given you all the preceding chapters, lectures thoroughly. So, my appeal to all the students, share this to all the students so that they happen to get benefited out of it, be it in your neighbor, be it in your school. And also would expect you to make a comment in the comment section, because I personally happen to go through each of the comments, and to the extent it is possible to incorporate the suggestions, I'll certainly do so. So thank you all the students, and do well in this exam. We will take up the next chapter in our next class. Thank you so very much.